Good afternoon, ladies and gentlemen. Welcome to the NIGHTCAP PLC full-year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab, just situated on the right-hand corner of your screen. Just simply type in your questions at any time and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today, and we'll publish those responses on the Investor Meet Company platform. Before we begin, we'd like to submit the following poll, and I'm sure the company will be most grateful for your participation. And I'd now like to hand over to CEO Sarah Willingham. Good afternoon.
Hi there. Thank you so much for joining us. I'm conscious that quite a few of you have probably seen us or seen this before. So what we're trying to do actually is give more of an update rather than going back over what NIGHTCAP is. However, we will recap just in case we have any new investors in the room, which is exciting. So we'll take you through sort of the journey to date, and we'll do that really, really quickly. We'll talk about the results that some of you may or may not have read, which are great. So we'll take you through those. And then we'll also spend a bit of time talking about sort of the current landscape, which is really what everybody's talking about at the moment in hospitality, and how we're reacting to that, what we've done and what we think, without a crystal ball, but what we think the future, the sort of short-term future looks like. And then we really do what Mark said, as we welcome questions. We really, really do welcome questions. We want, please post anything you possibly can, because there aren't enough people in the room here for those questions not to be relevant to everybody, actually. So it's good to know, what do you want to know from us? So, bit of background. Most of you will already know this. Our mission was and still is to be one of the UK's leading bar groups, and we want to do that through acquisition, so identifying incredible drinks-led hospitality groups, which we would acquire and then roll out, things with national rollout potential. So far we've done very well in that journey. We acquired them very quickly, which Michael will take you through that time frame. Bit of a summary of what's coming up. A lot of it I've kind of already covered, but a little bit more detail. So we, in less than 2 years, we floated in January 21. So we're not even 2 years old yet. We've seen significant growth, certainly in the last full year of trade. So the results that have just come out take us from the beginning of July last year up until the end of June this year. And in that time, we went from 19 to 31 bars. We've actually opened 6 bars in the last 6 or 7 weeks, real whoppers as well. So we'll talk you through some of those. But during that period, trade sales went from 6 million to 36 million. And we're more at a run rate, even today, with the 6 that we've just opened in being in a partial year, we're looking at a run rate of around 50 million. And if that was properly annualized, it would be significantly more than that. So we've really made a lot of progress in the last year to 18 months. And during the course of this year that we're actually talking about now, these results that have just come out, we welcomed Barrio into the group. They've slotted in perfectly, and we're really enjoying starting to roll them out. The trading update, which we'll give again we'll give a bit more detail, but when we set out, if you heard any of our story at the beginning, one of the things was always about really seizing this opportunity where, coming out of COVID, property was going to be at an all-time low. And actually we would get very, very favourable terms and access to incredible sites with a great covenant that we'd not expected to be able to we've not seen before. That's been true. We've had some incredible wins on the property front, and some of them are starting to trade now, which is been great, and a lot of them are actually beating our expectations. And we think that the recession that we are currently in, and certainly will go into deeper at the beginning of 2023, will actually be very tough for a lot of people, and that will result in a lot more property being available. So we will talk a little bit more about how current trading has been impacted by rail strikes. They're actually the thing that impacts us the most. It's really, really significant when we have a weekend of rail strike. we've as a result of seeing this slight softening in sales, as a result of the rail strikes, we've decided, and not knowing what's coming into the new year, we've decided to really start to just rein it in and be more cautious of our expansion plans. We don't know what the future holds, but the most sensible thing to do right now is to focus on the 36 incredible sites that we have, make sure that we're absolutely getting the most out of those sites that we can, that we're running them to their best ability. We've got to be the best of the best in a recession. There's no place for mediocrity. And in that slowing down, we'll start to build, again, a good stockpile of cash so that we'll be ready to go when the market shows that consumers are feeling a bit more confident and the rail strikes stop. I mean, I don't know if we need to really introduce, I think everybody here is most likely to know us, but I've spent my whole life since I was 13 at some point in the hospitality industry, either as an investor, as a founder, as an entrepreneur, or actually in my teens as a waitress. I was one of the co-founders of London Cocktail Club. I'm also chair of a couple of other hospitality groups. So I know a lot about hospitality.
Hi.
So you can talk.
So we need, yeah, a quick one. I'm like Sarah, been in and around hospitality 20 plus years, doing sort of buy and build through music venues of the Academy Music Group, and then latterly another cocktail chain called Beer One, both ending in sort of trade sales, and coming up to sort of 2 years now with NIGHTCAP, having gone from 0 sites and 10 on acquisition to the 37 we sit at now.
Yes, and I'm Michael Toxford, and my role in particular has been the buy and build element of putting NIGHTCAP together and with Sarah, and also making the acquisitions and making sure the integrations work, and a lot around the financial structuring as we move through, particularly the acquisition trail. And moving into this, basically, this just gives a little overview of the journey to date. So we IPO'd NIGHTCAP in January last year, and in that time, it's been a flurry of activity. Really, we acquired London Cocktail Club, which is now the Cocktail Club, from the outset, and only 4 months later, as the markets were opening up again post-COVID, we acquired Adventure Bar Group, which included particularly the 2 rollout concepts we're focusing on tonight, Josephina, Blame Gloria. And a few months later, in September, October, we started then the initial organic part of the rollout, as we had prepared the Cocktail Club and also Adventure Bar Group, partly for the first new sites, particularly outside of London, which Sarah will talk a bit to. We then acquired Barrio in November, which included another 5 bars. And as we then moved into 2022, you can see in the March and April, again, we continued on the organic rollout, and we've just been ramping that up and accelerating it through to the last 6 weeks, really, where we've opened another 6 bars. So that is the 18-month journey, and that's what takes us to the 36 sites. We thought initially, as we IPO'd, that the particular part of the market opportunity where we saw very attractive sites available at more attractive property deals than probably ever before, that window was short. So we were very focused on deploying the capital we had raised on those sites. But certainly, as we now finish the year of 2022, we can see that property opportunity is certainly extended and will be lasting for a lot longer.
So just to look at the actual results for the year ending 3rd July, we've increased our revenue by 500% from 6 million to 36 million, as we've taken the number of sites from 19 to 31, and include which is 5 bars acquired through the Barrio acquisition in November, and we've opened 7 for the cocktail club and adventure bar group. We also in that time refurbished 4 of the existing sites, being 1 cocktail club in Shoreditch and 3 of the adventure bar group sites. Our like-for-likes were excellent, coming out of lockdown at 23.6% against 2019, meaning sort of our adjusted EBITDA increased from 0.2 to 3.3 million. And we now have a business. Well, at the year end, we had 560 employees, and we now got over 750 with the last sort of 6 openings. We have, as in the reports, we've now got a new banking partner with HSBC. So we've been able to deploy, as we said last year, and in March, the cash we had from the fundraise of 13.2 million, plus some funding and our own cash flow generation of 2.3 million. We've been able to deploy that by spending 10.1 million, being the acquisition of Barrio 3.7 and the capex and pre-opening on the new sites that I just spoke about of 6.4 million, leaving us at a year-end position of 5.3 million in cash. Since year-end, we've drawn from the bank, but we still hold, I think, as in the trading result, we still hold 6.8 million as at the beginning of October of this year. So I think one good thing we've been looking at, with Michael said, is around the property. I think the sector a rent percentage can range anywhere from in the 10 to 12%. We for the year results, we had 2.7 million of rent, which represents 7.6% of turnover, and we are looking for the year we're in now to be more around the 4 million of rent, but on a sort of run rate turnover of 50 million. So keeping at that 8% targeted mark, which is basically sort of shows that there are these great property opportunities, and given the current economic climate, that period is only going to go on for a longer period of time. So we sort of feel that runway has still got a few more years for when we want to get back onto the expansion trail at some point during next year. You're on mute, Sarah.
Mute. Our expansion has been really interesting. We started off going west and opened up in Bristol, then Cardiff, Exeter, Reading, and recently we've just opened up a wonderful Tonight Josephine up in Liverpool. The really interesting thing with some of these sites, a couple of things, is one, certainly in Bristol, we have 4 bars all pretty much within walking distance to each other under different brand names. So we've got Tonight Josephine, we've got Blame Gloria, and we've got the Cocktail Club, all really close to each other and all doing really, really well. So these sites already, the Cocktail Club, for example, opened 11 months ago, and we expect it to hit maturity we model for our sites to hit maturity in year 3. And the Cocktail Club Bristol, as well as Reading, as well as Exeter, will actually finish the year really close to model at maturity. So they've really exceeded expectations. We've been delighted by how well the openings have gone out of town. And the beauty of having them all operating close together is, one, you can start to look at sharing resources and learning and knowledge and training between the different businesses, but also it shows that actually we're attracting a slightly different customer between the different businesses, so we can operate very close to each other. Likewise in Cardiff, you can wave to the Tonight Josephine from the Cocktail Club on St Mary Street there. So the openings outside of London have gone really, really well. We've also continued to open in London, and I have to say Canary Wharf has actually taken us all by a bit of a shock, because it's really exceeded expectations. We've only opened that one very recently. and that's already doing 40 grand net a week, which we just not expected to open at that level. We also opened Birmingham, the cocktail club up in on Temple Street, very close to the Tonight Josephine's there. And we've also got the phenomenal Lunar Springs that's done amazingly well over the summer. So we're very, very pleased by how our new openings have gone, actually. And as most of you will know, the model is 75% return on investment by the end of the second year, with a payback of 2 years. And it looks like they're on model to beat that, the ones that we've opened, certainly the ones that we've opened outside.
Yeah, and Barrio, I think we might have talked to Barrio at our last investor meet, but just because it happened during the financial year that we've just finished, it's worth touching upon. So Barrio we acquired in November, and the focus really for Barrio is tequilas and tacos, which is one of the fastest growth areas. Particularly tequila is growing faster than any other spirit in the UK at the moment. And we are super excited about the 2 openings that we've just done in Watford and in Covent Garden. They've only been opened a couple of weeks because there is this timeline from when you acquire a brand to actually find the right properties and getting it ready for rollout. So we're super excited about that. And I think worth touching on is that the economics around Barrio were very similar to the other acquisitions that we made. We were very focused on buying at around the 4 times trading profit or annualized profit, which is significantly below sort of long-term averages. But we've also got to remind ourselves that NIGHTCAP was IPO'd just at the beginning of the last lockdown. So part of the model was certainly to look at brands that had taken on leverage and were looking for ways to exit or recapitalize. And Barrio also fell into that category, and we're super excited by how well it has slotted in so far. I will only touch upon this just very briefly for those of you who've not been with us before, and basically just talking a bit to the opportunity leading up to the launch of NIGHTCAP 18 months ago, is that the late night bar group that we're building is focused on the Gen Z and the millennial consumer, high disposable income, super sticky in terms of wishing the social nights out with their friends, particularly also post-COVID, where we've seen a sort of surge of activity from that group. They're very resilient in terms of how they behave and how they enjoy our spaces, and we continue to focus on them as a consumer group, both in London and also in the sites outside. Now, touched a bit upon, and so did Toby, around the large number of attractive sites that we've seen in the property market, and we continue to see, and that's partly caused by the decrease in competition, which was a fallout of COVID, but also certainly as we move through this recession, we're likely to see even less competition for sites, and that is effectively what's extending the property window as we see it. But let's move on to current trading.
So I think this is the topic that most people seem to want to talk about, quite understandably, because clearly the environment that we find ourselves in now is very different than the one that we just finished the end of year. So as I said earlier, without a shadow of a doubt, the train strikes are the things across the country. Everybody assumes that it's actually affects London. It's just not the case. It doesn't matter where you've got a bar or a restaurant, whatever sector of hospitality you are in, the train strikes are going to impact you because people change their plans. They plan to not come into town that day. So hopefully, although we just read about 5 minutes ago, actually, that they've announced that they may be going into further train strikes, but we will just have to keep our eye on that. That is definitely the thing that impacts us the most. So we have seen a slight softening in the sales since the beginning of this financial year. So July, August are always soft for us, but September and October across all brands, all 36 sites, just like you're seeing across the whole of hospitality, we have seen a slight softening there. Now, we think we're going to have a fantastic Christmas. We've got great visibility on Christmas. And I think we're not alone, actually, in the industry for thinking that. I think Christmas is going to be very good for all of us. Corporate bookings are through the roof, and a lot of our Christmas is pre-booked and prepaid. So we really do have very good visibility on what Christmas will be like, and we're expecting it to be really good. We've seen a couple of, I would say, interesting trends that are starting to come out. The nice thing now with having 36 bars in lots of places all across the country and different bars is actually when you start to get the data through, it becomes statistically significant enough for us to be able to go, okay, that's a trend. That's not like just that bar's badly run, or maybe it's just people in Bristol. When you start to see it across an entire group, you start to see that actually it's more of a trend. And we're definitely seeing that the work from home impacts the way that people are drinking. So Tuesday, Wednesday, Thursday seems to be the most popular time to be in an office, whichever city you're in, actually. And so Thursday nights are much bigger across our entire group than they have ever been. Friday nights, however, are much quieter. We don't have anything like the same Friday night that we used to. And then Saturday, I've actually never ever seen weekends like it in my whole career. It's like everybody goes all in on a Saturday, and it's become the big party night. And one of the things that we have done, and this is actually part of it's the model that sort of came in with partly Barrio, but also Tonight Josephine and Blame Gloria, is the brunch model. And it's becoming more and more important to our business models going forward, in the fact that these quieter times when traditionally we wouldn't have been open, we're able to sell the space. So sort of maybe between midday and 5 o'clock on a Saturday, likewise on a Sunday, sometimes even on a Friday. And actually, we found one of the things we've done is really increase the number of events that we're putting on in response to the fact that that Christmas bookings are so, the corporate Christmas bookings and the group Christmas bookings are so popular, and actually they're really selling out. And the nice thing with that is it gives us great visibility. It's also a marketing model, right? Like you can actually, you know how much you're going to spend to get those customers in. So it's a really nice way of us kind of trying to mitigate what's happening out there in the economy at the moment. So these are the things that we, everybody always asks us, what about the inflationary pressures? Because you read about it all the time. And there are a number of things. We were pretty far ahead of the game on a lot of these, and we are quite well placed now going into what we think is going to be a very difficult Q1, actually, of 2023. So one of the most important, we actually spent the afternoon yesterday with our bank, with HSBC, and they were telling us that very, very few people either fixed or capped their interest rate going into this recession. And we luckily capped at 3%. So we don't anticipate, therefore, any impact we won't have any impact of any increase in interest rates. Utilities, again, at the early part of this year, we fixed the majority of contracts across the group. So we are only exposed a tiny bit on some of the newer sites, but the majority of fixed term contracts go all the way through 2023 and some into 24. So again, that's one of the things that everybody's very concerned about, but actually we've been able to mitigate that early on and fix that. In terms of the inflationary pressures on our cost of goods, so that's, we are 90% alcohol drinks basically coming out of our business. So what have we done about that? Well, when we acquired 3 businesses, there were all kinds of alcohol deals you can imagine all over the industry. What we've done is consolidate the whole thing and actually purchased as a group, which has meant that we've got far bigger buying power than we ever had as individual entities. And we've done a fantastic deal with Bacardi. We're delighted to be working with them. And that will result in no increase at all in our cost of goods sold. So on the one hand, the prices in some places are slightly better, but we're also getting a lot more support from them, a lot more marketing support as well, and retros on some of the big volume products that we are selling. We are seeing an increase in our happy hour. So that has a negative impact on our margins because, of course, we're selling drinks during that period at a lower price. But even when you net that off against the benefit of the group deal, actually we see a zero increase. And then the final one that really everybody talks about a lot in hospitality is labour. Now, we did everything we could earlier on this year to really try and publicise the fact that, firstly, our bartending training, so we launched an academy, is best in class. It's one of the best in the industries, and we're really known for that. That's been rolled out across the entire group. We're also starting much better management training where we're teaching people about the business of running a bar, and that's also been very popular. And that's really helped. We've definitely seen in the last sort of 6 to 8 weeks, we've seen that churn that you normally see in hospitality. We've seen that really come down. And in fact, people are staying for longer. We're starting to combat some of those statistics that you traditionally would see. And that's been great. But in all honesty, I do also think that as we go into next year, the labour market will look different. I think there will be a lot of businesses, very sadly, that will struggle. And I think the staff retention will be easier because of the macro environment as well. But we will naturally do all we can to retain them through really positive training. So in summary, we are well on our way to building the UK's leading bar group to go from 0 to a run rate of 50, 60, 70 at maturity on these sites within less than 2 years, 18 months. We're really proud of what we've achieved so far in NIGHTCAP, and it'll do everybody good to just for a second just stop and go back and focus on what it is that we have and make sure that we are getting the best returns out of those sites, that we really are the best of the best on each of those streets that we exist on. But we do look forward to continuing the rollout as soon as we possibly can. We'll probably open another one this financial year, but also building that cash pile and riding this storm of the recession, building the cash pile so that we are in a position to really go again as hopefully we'll spot it again, like lots of other things, just before it happens. So we'll be ready for the organic rollout again as soon as possible.
That's great, Sarah, Michael, Toby, thank you very much indeed for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab just situated on the right-hand corner of the screen. Just while we give the guys a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, will be available via your Investor Meet Company dashboard. Michael, if I may, you can see you've had a number of questions from investors today, so thank you to everybody for your engagement this afternoon. But if I may, Michael, could I hand back to you just to read out the questions and then perhaps take some responses, and then I'll pick up from you at the end.
Yes, certainly. So I will read the first question out, which is one I'll answer myself as well, so that makes it a bit easier. So the first question is from Simon C. Given the decline in the share price, how does the board propose to fund any additional acquisitions without diluting existing shareholders? What I view as a depressed price valuation. And Simon, we couldn't agree more. The markets are difficult, and all share prices in D2C businesses have suffered over the course of this year. Now, as you would have seen in our previous acquisitions, we do tend to be quite creative in terms of how we complete acquisitions. We, as part of slowing down the rollout, the intention is to build up a cash pile that we can then deploy in the best way as we see fit, whether that may be through an acquisition or whether it is to go hard at the rollout. Again, depends on the relative valuations, like what does it cost to acquire versus the cost of building. But it is absolutely our intention to only do acquisitions that are accretive, and that means that heavily issuing shares and diluting is not part of our plans. We said that before, and certainly now with where the share price is now, that continues to be the case. Another question, Miles, congratulations on your growth in a difficult market. I bought into the IPO. Have you thought of offering loyal shareholders perks such as discounted drinks, etc.? Other companies do this.
So well done, Miles. You are the second person to nudge us on this, like hard prod today. It's absolutely written down in big bold letters. We've just not had it as a priority, but you're right, it's been on our radar for nearly a year now, and in all honesty, we just haven't done it. I don't know how else to say it. We just haven't done it, and we should have done. And we're now going to be able to focus on it, and we will watch this space. We will have, like, the sort of gold member card or black card or whatever. But yes, exactly that. We should have it.
Another question, given the success of the rollout and the potential of good sites becoming available, why slow down? I know that being financially disciplined is important, but as a growth business, the market opportunity here shouldn't be missed.
So I think it's a very fair pushback, actually. And I think there's a couple of things. Firstly, the opportunity won't be missed. I think there's going to be more property available at better prices, more incentives in 6 months' time than there are today, in 3 to 6 months' time than there are today. And I just think we all think that at a time when we know there is an economic slowdown, we know that sales are soft, and whilst we're going to ride through Christmas and we're going to do all we can to maximize our revenue during that period, going into the new year, we actually don't know what the landscape looks like. And we do fear that it will be a lot softer than we think in the beginning half of the year. We need to make sure that we are absolutely well placed to make sure that we just sit and we conserve our cash, so that when the opportunity comes again with the property, and it will be better than ever, we are ready to be able to grasp that opportunity. I think this is the sensible thing to do, and it's the right thing to do. We will also benefit from all the team sort of consolidating again, going back to the basics and looking inward at the business. It's a really positive opportunity for everybody.
And thank you, Sarah. And one for Toby here, I think. Do bar managers have the opportunity to buy into a company share scheme as another way to reduce staff turnover and improve staff loyalty?
Yes, they do. We look to offer share options, which we issue as we come out of a closed period, being once we've released either our interims or our annual results, so twice a year. And we look to reward the general managers and area managers and the staff within the business. And it is a good tool for retention, but it's also, the main reason we look to do it is because we want the staff to be with us on the journey, and hopefully that they get to when they vest and they can sell those, and it becomes another sort of string alongside salary, bonus, benefits and things like that. It's something to just really reward them, because at the end of the day, they are the person inviting you into the bar. They're the ones serving you. they're right at the coalface. They are the ones bringing all of our revenue in, and if we can't really look after them, then we're not doing ourselves justice.
I also think, just to add to that as well, it's absolutely sits next to the kind of the shareholder member reward things on the same. It's the same to-do list. Actually, it's something else that we've talked about, where encouraging, it's not just the options, but also the ability to be able to buy in and get those favorable kind of member rates, basically, for everybody. So it's something that we should hopefully have a bit of time to focus on now.
Another question is, what impact is the growth of competitive socializing type bars having on NIGHTCAP? I think that's an interesting one. We actually see that in places where we are sort of surrounded by competitive socializing, we tend to do really, really well. So competitive socializing, for those who don't know, are things like a flight club, where you go and you socialize around some sort of competition or events, being it darts or bowling or mini golf or whatever. And it seems to us that as a late night bar operator, we only really benefit from the spillover of people socializing first in a gaming way, and then they go out together to have drinks in a more of a party atmosphere later. And so in Canary Wharf, for example, where we're sitting right next to a couple of competitive socializing venues, we've seen that from the outset, but we also see it all over the country, actually. So far, we only see us actually benefiting, and often they look at different type of sites, so we don't really compete for the same properties. Very often we see that often in order to do competitive socializing, you often need much larger venues in order for the gaming elements to be embedded, whereas we are much more flexible in the sites that we can take from sort of 2,000 square foot up to maybe 8,000 square foot, and often competitive socializing sites tend to be larger. So we happily coexist. And maybe one for you, Sarah. Great progress. What visibility do you have on the Christmas period? Any new initiatives, etc., to drive revenue?
Yeah, I saw that one, but I think I answered that when I talked. In fact, I kind of got half an eye on that when I talked earlier about the bookings. So I explained a bit about the bookings, but also what we were doing in terms of we'd put more events on across the group, so that we had more bookable slots, actually, sort of 2-hour bookable slots. But we are expecting a good Christmas.
And leading from that into the World Cup, what will you be doing? What kind of boost, if any, do you expect from the World Cup on trade?
So all of these events are always good for business, because it gives people a reason to go out and a reason to celebrate. I mean, certainly in Barrio, we're going quite large on the Latino games, and it usually proves very popular. So we're expecting it to be, again, it's another reason for people to want to socialize. So we're expecting it to have a good impact, and we are doing a lot of promotions and marketing around it.
Yeah, and also Lunar Springs in Birmingham, which is a big event site, where we can now, with big expansion of tents, etc., we can take up to 1,000, 2,000 people, and we will be putting on the World Cup in that site as well, all through November and into December. We have another one saying, as a third private shareholder, please for a discount scheme. So.
It's coming up quite a lot, actually. We're getting a lot of grief.
Nice to see, actually. And I think we should thank everybody who's listening on here for the level of engagement, for people not only be shareholders and be interested in that way, but to actually want to partake in our journey by physically being in our sites and enjoying them with us is it's a real privilege to have that level of engagement, and we need to sort of tie that up very quickly to make sure that. Yeah,
we will. One final question just came through then, is any plans to expand in Manchester? Definitely. Love Manchester. Definitely.
Yeah, and I think one thing that we've looked at, because very early on in our journey, as we particularly moved out of London, we wanted to see how well our concept could trade alongside each other. And I think Bristol was probably the sort of the first example of where we've deliberately expanded into where we now have 4 sites all within walking distance. We don't have a barrier there yet, but we would like to. We think it's very appropriate actually for Bristol as well. And what is that those 4 sites in Bristol will now be able to, particularly if a barrier comes in there as well, we'll probably be able to deliver 7 to 8 million of sales in Bristol alone, which means that when we look at places like Manchester, we've only just opened our first in Liverpool. Obviously, we have 3 in Birmingham as well. But the ability to actually open these concepts that are all have different focus in terms of how you enjoy a night out, trade really well alongside each other. And we can't wait for Manchester to get on our NIGHTCAP map as well.
That's great. Michael, Sarah, Toby, thank you very much indeed once again, and thank you to everybody for your questions this afternoon. Sarah, I know investor feedback is particularly important to you and to the rest of the team, and I'll shortly redirect investors on the call to give you their feedback. But I wonder, before doing so, if I may just ask you just for a few closing comments to wrap up with, and then, as I say, I'll redirect investors to give you their feedback.
Yeah, I think actually it's been really interesting. We've had quite a lot of feedback from people who've been out in the bars over the course of the last couple of days. And I really, please email me. I mean, it says here email at nightcapplc.com, but I'm Sarah at nightcapplc.com. You can't give us too much feedback. We want to know everything about when you go into the bars. So please write to us and give us that feedback. And again, just as Michael said, thank you so much for your ongoing support, for your loyalty. I'm really proud of where we've got to today. Really proud. I think we're doing the right thing by just reining it in a little bit, being more cautious, going back to basics, and then we'll be absolutely ready to start rolling out again. Hopefully in the spring, part of next year, when hopefully the economy starts to turn again and consumer confidence is back up. So yeah, please keep going out.
That's great. Thank you, Sarah. Not a lot of convincing with that one. Ladies and gentlemen, thank you very much indeed to you all. And could I please ask investors now not to close this session, as we'll now automatically redirect you in order that you can provide feedback directly to the management team. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team and NIGHTCAP PLC, I'd like to thank you for attending today's presentation. Good afternoon to you all.
Thank you.
Thank you. Thank you all.